Hey traders, Barry Burns here with Top Dog Trading, and yep, we're going to do some live trading here. So before I go any further, let's just note what we've got here, which is a reversal trade, wave 7 on the short-term chart on the left side, and confirmation on the 600-tick chart on the right side, and we're in, just filled right there. So what do we got? Okay, so the basic setup here, of course, is a 7-wave reversal on the short-term chart on the left. And then we've got confirmation on the right with mom angling down at the time of entry. That's one of the questions I get a lot. By the way, that is a second chance pattern on the short-term chart, even though it may not look like it, but it is a convergence pattern. And we also have a second chance pattern on the long-term chart. I'm just going to refer to them as short-term and long-term charts. So that's cool. We also have concurrent cycle highs. So that is really awesome. We also have a lower high on mom on the long-term chart. And we've had an extended wave 5 over there on mom. So now's where we expect it to bounce a little bit, right? This is where this is typical, by the way, so not unusual. We're putting in a cycle low, or at least we're in cycle low territory on the short-term chart and at the 15 EMA. So not unusual for the market to bounce a little bit here. And here's where a lot of people get freaked out and say, oh my God, oh my God, oh my God. Yeah, no, that's normal. That's to be expected. Markets wiggle up and wiggle down. They don't go straight up and straight down. So that's the way she rolls, and that is not unusual. In fact, it is totally expected. So we're looking for more than that to get out of this trade. And I don't know if I'm going to be able to fill up the whole 15 minutes here, or 10 minutes, whatever this lasts, with commentary, because things move kind of slow after a while. But so there might be some periods of silence, and that just means that there's nothing really new to say as we're taking the trade. But during the setup, obviously, and during the entry, yeah, I wanted to make sure that was clear to you. All right, so so far now, that's a good pattern right there at the 15 EMA and the short-term chart. Notice the 3 bars there just went sideways, and now we're going back down again. So we didn't really get a bounce up, and that is a positive sign. In other words, it's a bearish sign, which is positive since we're short. And that's good. So now we're looking at the next support level down there. And also, by the way, be watching the 15 EMA on the 600-tick chart. So that is also support. So you've got support and resistance on both time frames. And yeah, I always look at support resistance on both time frames when I'm taking trades. So that may be another little tidbit that you weren't aware of, and very important, muy importante. Notice on the long-term chart, wave 1 came in right at S2, floor trader pivot 2. So, bully to those who say, oh, those floor trader pivots don't work. Yeah, right. So, anyway, notice also on the short-term chart, wave 6 occurred right at S2 as support. So it came in both as support and resistance on the 2 different time frames. So it's working on multiple time frames, and yep, it works. So yep, if you're day trading, then I highly recommend you use floor trader pivots for sure. Alrighty, now we're down a little bit below the 15 EMA again. Things have slowed down here again. Very typical, not surprising. We're down into support levels, so you know, at support levels, people, they take notice of that, and they're not going to normally be aggressive in selling, shorting, or holding into support levels. So you're going to get some buying there. You're going to get some profit taking from people who are short, just like us. You know, I would have taken my first profits here. And so therefore that causes the market to kind of at least pause, if not bounce. And right now, at least so far, we're just getting pause. We're not getting a bounce yet. So we can see these bars are just kind of hanging in there, just kind of going sideways, no problem. All right, got a second chance pattern to go, well, second chance pattern cycle low on the short-term charts. So this is where we got to be careful, because This is where we could go up and put in a wave 9. Fortunately, we already got some profits off at our cycle low. Remember, the first target after a cycle high, if we're going short as we are here with the cycle high, then our first target is the next cycle low. And so we've already put that in. And so we've got part of our position off. Now we're doing well here because the market's going back down. I put in a cycle high. And yes, it did put in a cycle high because D got up to 45. And so we're kind of in a bit of a pinball pattern here. And also notice again on the 600 tick chart, we did run into the 15 EMA. Told you to be on the lookout for that as support. So, yep, got that. We're there right now, actually. So, and we're also at the 50 EMA on the short term. I'm sorry, 15 EMA on the long term, 50 MA on the short term. And also you'll notice that kind of dashed blue line there. That is from a previous high on the 200 tick chart, a previous swing high. That had been broken. We got above it, and that's why it's dashed. If we didn't get above it, it would be solid. So in other words, if you look at wave 7 on the short-term chart, you'll see that that is a solid blue line. That's because we have not broken above it. We put in a major swing high, and we did not break above it yet, so therefore it stays solid. The previous high that's off the left side of the chart, you can't see it, well, that was a swing high there as well, but then we broke above it, as you can see here with wave 5, failed 7, and the actual 7. And so then on the top, that's based on the top dog custom indicators, by the way. So what they do is they plot those automatically for you, so you don't have to plot your horizontal support resistance lines off of major swing highs and lows. And then if they get broken once, it turns them from solid into dashed. And if it breaks it twice, then it actually removes them from your chart all automatically. Okay, so now we're back down here to our next cycle low, going down to the 100 MA on the short-term chart. And our next cycle low, as I said. So expect, and also, by the way, we're at S2, right? Support 2. So lockets of profits down there. That's our second exit. And we've got to be very careful here now, too. Again, these are your, so basically the targets, profit targets, are areas where the market could turn around and go in the opposite direction. So in other words, we're short, but if we were to put in a cycle low, then, well, the market could go up and we could have a long position, and especially if it's at support. So we look for that confluence of support and cycle lows to take our profits. The first one, then the second one, and so forth. So that's really why we take them there, is because those are points where the market could move against us and turn into a whole different trade, turn into a long trade. Now, we don't have a long trade here, by the way, so we would not stop in reverse here because mom is still angling down on the long-term chart, right? But we've also got to be aware that that is a second retrace in the trend. It's not confirmed, but that's where it is real time, trading bar by bar. What will happen in the future, nobody knows. And that's why we trade bar by bar, and that's why we take these profit levels, or these profit targets, because we can't predict the future. So we're not here to predict the future. We're here to put some money in the wallet or in the purse, as the case may be, in your man purse. So we are just trading it bar by bar, saying, I don't know what's going to happen. By the way, part of the reason for that is also that it is easier to, I hate to use the word predict, so I'm not going to use the word predict. So many people use the word predict when it comes to trading. I don't. But what I say is it's easier to establish a probability scenario on a short-term basis than on a long-term basis. So therefore, our first exit, our first cycle high to first cycle low, get that most of the time. That's our highest probability leg in the trade. Then the second leg is the lower probability, and then the third leg is the least probability to follow through all the way. So just be aware of that. That's really, really important. Because again, we can't predict. Anything can happen at any time. It's one of the famous ancient Chinese sayings I just made up. No, actually, that's a famous trading quote that pretty much everybody knows. Anything can happen, or no, the actual quote is, the market can do anything at any time. That's the actual quote. The market can do anything at any time. And from a very practical point of view, you can understand that. I mean, heck, news can come across the wires, gossip, anything. And therefore, your 50 MA is not going to tell you, oh, in 20 minutes, there's going to be a dramatic economic news release out of Europe, right? So no indicator is going to tell you that. No, there's just no way to account for that. So these things happen all the time. Or sentiment changes for whatever reason. You might not even know at that point. Frankly, it doesn't even really matter. If it changes, the price moves, then we want to be out. And sometimes later on you found out, oh, the price moved and it was just not even real news. It was just gossip or just a rumor. And then the market sentiment changes again. So point is, we just are here to get in and out at certain price levels to make us some money. And you can go back and analyze the reasons why till your face turns blue. Knowing why doesn't make you any more money. So, alrighty. So, great. We went into X marks the spot trade, and now we're coming back down off of that, off of another cycle high, and we're back down to the support of that blue line. See if we can get back down to the 100 MA. See what's happening here. And by the way, trend reversal trades rarely work. And by the way, when I say work, now we've made money on this, we will not lose money on this trade at this point. So, but I don't use the word work, a trade working, synonymously with making money. So when I say a trade worked, I mean, did the trade fulfill the expectation of the setup? So the expectation of a setup, I don't even like the word expectation, but the perfect reason for taking a trend reversal trade is to get into a trend in the opposite direction before that trend is confirmed. And that rarely happens. So while trend reversal trades are the single best reward to risk ratio trade there is in all of trading, wow, we all want that, but that is inversely correlated with win-loss ratio. So rarely does a trend just go into a straight trend in the opposite direction. Usually it goes sideways for a while, meanders for a while, and that is the normal transition between one trend to another. And that's why trend reversal trades normally don't actually work. So we call those, in Top Dog Trading, I call those failed trades that make money. Failed trades that make money. Yep. So kind of like that. Makes me laugh for some reason. Okay, so how are we doing on time? Okay, we got to keep these videos short so that everybody can view them. If they get too long, then it screws up people's computer systems. So we're going to we'll continue this, but we're going to have to do it on another video clip to keep these files somewhat short. 10, 15 minutes is about the max that people say that they can watch, or the file size works for them.